Good morning, trading buddies. How are we today? I'm going to rename myself here and do all that stuff so we know who we are speaking to. It's obviously not online trading profits. Let me just change this other one as well. So it is going to be me this morning. Now we have got lots on, so lots to talk about. I'm just going to make sure that I can share screen. I think Ainsley will be joining us later with any luck, which will be amazing because actually gold is on the move. And I want to talk about gold first. We will talk about the Ftse as well. I've got the Ftse is really going to be quite tricky to advise you guys on completely because I've got so many trades in there of my own. In fact, I can tell you what I will probably do. Let me just make sure I've got the right chart here. Here we go. So this is what I got with a Ftse to start with. So Ftse 100. Let's talk about this one because this is the one that I would trade every day. Morning, Paul. P. Good morning, Lewis. Good morning, Swee. Right, so the Ftse 100. Now, I have got a load of trades on the Ftse, not a load, but I've got a few trades on the Ftse where I was buying at the highs and up here. Let me see if I can bring this up. I was buying up here and the market started to fail. In truth, it was a pretty poor trading in many respects, you know, buying at the highs. Buying up there isn't a problem, but I had too many positions open. I was looking for the bounce back in the short term. It didn't happen, so I had to hedge my trade. Now, I did hedge the trade to the downside, just a little bit lower than we are now. And as this market came back, I took the profit on the hedge to the downside. So I'm in pretty good shape because I managed to get another hedge in just on this level here. I think I might put another position on short if the market pops up to this trend line. And then I might close the lower hedge and effectively, actually, we're pretty much there. Yeah, somewhere at about 70.10. So 10 pips away from where we are now. On your charts, it'll probably be somewhere around, where's your Ftse? Maybe somewhere around 70.40. Now, if it doesn't get there, I probably won't take the trade another one short because we won't be at an extreme. And I kind of want it at an extreme just in case it does pop through my level. And then if it comes back, I can close the position off. So I am looking for the short. Now, I'm not sure whether the short is going to be on for much of a move, but I think there may well be a reaction at that particular price point. So, so I will look for around about 70, yeah, around about 10 to 12 pips time. I will look to see if there's a short on as we open. Actually, the market's about to open, isn't it? So let me make sure I've got this open as well. Now, the issue is that the indicators are not going to catch up by the time this all happens. If this is going to go, it's going to be a little bit of a hold your nose moment for me. And the reason I think that there's a short on is because we're in a sell zone, and the news later on would suggest that we're probably not going to be continuing the trend to the upside. That's the suggestion. Now I'll bring that up in a moment after I've just set up my indicators here. I think the market is probably going to look relatively bullish. Now, if I don't get that short on, it's no big deal because I've got the hedge on, and it just means that I've got more work down the road a little bit, but that's okay. Okay, here we go. Market opened up. Now, I will see if I can get my trade on. I'm just going to bring up my indicators here. That. There we go. Okay. All right, now it's there, isn't it? So let's see if we can get this trade on here. Right, I'm just looking at the indicators. Yeah, they look pretty good actually. So I'm going to look for a little bit of downside here. Now, alternatively, if this one goes up here, I could shoot up. And this is quite good in many respects, because now I can see if it's going to fail. Now it's through my level here. So let's see if we can get it on. I'm going to leave it for a second. I'm going to look for the shorts. Indications look like the short could well be on here at this resistance point. If it's not this one, maybe we're back to the highs there. Let's see. That's probably good enough. Right, I've got the short in the market there. Oops. Now what I need is for it to come down here and test this level. Now, this level down here, or I could just take some profit if it does start to fail there. This level down here, so we are short in the Ftse at this particular level, and it's just trading the expectation that that traders will not want to continue to purchase before the Fed. That's all this is really. I mean, I might be completely off the mark here. I think I may well six. Yeah, that's right. That's right. Right, I've got to make sure this is well in control here. Okay, so we'll see what happens. Now let's just bring up the news. And see what we got. Now, if you guys are taking this trade, you probably want stops out the way up there. There's a little gap down here, which is also of interest, and it's possible that we get an absolute collapse down here, but I'm not sure whether that will definitely happen. Right, let's bring in the news and data and just have a look at this. Bring in all my currencies here. So we know that this is the big one, right? We know that it's all about the Fed. Now that is much later in the day, and I think there could be some fluctuations in the market before that time. It could be that we buy right up until the announcement, and then we start to fail. So even the level here, even though it looks like a decent sell zone, even that may not quite work out. And I can see that the market's pretty bullish this morning. It's opened up relatively happy. The Evergrande story is massive, and I think they've got another payment tomorrow that they've got to meet. Whether they meet it or not, who knows? You know, it's a massive deal, that is, to have such a huge company in China potentially defaulting on their payments. It could send shockwaves throughout the market. Now, the big question really for most people is there going to be contagion? And I think the overall view is that there probably isn't going to be contagion. I don't think the market is particularly worried about a contagion issue, because even though it's comparable to Lehman Brothers, Evergrande's a smaller company than Lehman Brothers. It's not quite as significant a company. So that may well suggest that the contagion issue won't be anywhere near as bad, so we might be okay. But this is big. Now, this is the reason for the short, and it's not because I think that the Fed will necessarily taper or not taper. I'm finding it really difficult to make an assumption on whether they'll taper or not taper, and that's why the short becomes attractive, because this would suggest that there could be just a little bit of uncertainty. And when there's uncertainty, the market is less likely to break through levels. So that's the punt I'm taking effectively. So in this regard, it's not about fundamental knowledge. It's just knowing there's a fundamental announcement to be made. And that fundamental announcement, unless the market assumes is going to be in one direction, may well just temper the mood somewhat. Whether you get the right levels is obviously a huge question, and the market's looking pretty hot right now. I have to say it's burst through those levels here. No, I don't really want to start reducing this position, but I could do. I'll probably leave this on for right now. I might end up having to hedge the hedge. You never know, but we'll see. We'll see. Looks all right. The market does look pretty hot. But the other thing with this stuff is that, that this can be a bit of a blow off top, because as the market started to move down in this scenario, it was relatively negative. If we look at the overall picture here, this is definitely a downtrend. So this could drag buyers back into the market, allowing those institutes to get out of bad positions. And then we start to move to the downside again. So that's the way that I'm looking at this. Now let's go to gold, because gold is the other one of interest. And I have taken a trade in gold down here. Now this is obviously also going to get. We will look at the pound as well. Yeah, that's a great idea, Lewis. We'll look at the pound. Now I wanted to talk about gold really with Ainsley when Ainsley starts to come in, because the gold story is obviously all about the dollar. If the dollar starts to weaken, gold's going to go higher. And the taper, and this is where everything's in the balance right now. If you are long equities, you almost want to get long gold as well. No, that wouldn't work, actually. You probably want to get short gold. I mean, I've got a long gold, short equities, but so that's kind of okay, because if the Federal Reserve don't taper and they sort of they come out and say something which could dampen the market, then obviously the dollar weakens and gold strengthens. Now that may well also boost equities depending on what the language is. So it's a bit of a tricky one, actually. Maybe it is long gold and long equities is the trade for that one. But I'm thinking about this off the top of my head, so I might have to do a little bit more thought on that. Now, when it comes down to the VIX, this is what the VIX is currently doing. It's had a pretty good run of it so far, but you can see this breakthrough here. Now, this is a weekly chart, so completely unresolved right now. But you can see the breakthrough here has caused some shock waves in the market. Now, a few days ago, we were up here. Now we're starting to retrace right back down again, and that could be relatively significant on the VIX as well. But it is starting to find some support. So not really knowing what the direction of travel is right now. All of this does start to become a little bit tricky, but it could find some support down here and then start moving up, and then again we might start to see those equities weaken off a little bit. S&P's had a bit of a roaring back, but it's not that significant as yet. Little ways to go on the S&P, and then we might also see this one break to the downside. I think most people that are trading the S&P would want to see the S&P hold under this trend line. If it breaks back above, then we might start to see the S&P rally again. But if the S&P holds under that trend line, then the collapse could be in place. Julian was talking about a potential for a 20% correction with the S&P, and I think that's possible. I do think that's possible, but we need to see, what happens. Does it hold? Does it start to break down? What happens with the Fed? And as I say, all eyes really right now are on the Fed. I would have thought that some of the buying at least would subside into that particular announcement, unless there is a educated guess, if you like, on what happens with the Fed. So, and that may well be on. So we've got a few things there. Now let's have a look at some of these trades. Then, what is your take on the pound significantly weakened today? Let's have a look. Now the UK is in a bit of trouble, actually. Let's have a look at the pound across the board. Yeah, euro pound I see. Pound Aussie I see. Pound CAD I see. So the pound is the weakest of the currencies. It's up against the yen. Okay, so the yen's the weakest because we did see that bounce back, but it is weak against just about everything else. Let's have a look, shall we? Let's see if we can get some kind of feel on the pound. Now, there's nothing here. Nothing there. So there's nothing in the data. So this has got to be a news story. Now, let's have a look at what the news is with the pound. Okay. This is the story. And you can find this on Sky News. So this is what we got. So a couple of wins for Johnson. That's the UK Premier. But no trade deal with the US is a major setback. Now that is a major setback. This looks like what the reason for the pound moving to the downside is all about. So for all common ground between the President Biden and Boris Johnson, Brexit, Northern Ireland are the flies in the ointment, and until they're resolved, it's hard to see whether the trade deal will be taken back off the shelf. So it doesn't look like the special relationship is working out the way that Boris Johnson wants right now. That seems to be what that particular story is about. Inverted head and shoulders on the daily, I see rather confused. Yeah, so it's inverted head and shoulders on the daily on what chart, Lewis? You're talking about on the pound dollar. And you see, this is the whole thing. You can be watching fundamental data as much as you like. I mean, maybe this is why we're seeing a little bit more upside in the Ftse as well. We can be watching the fundamental data as much as we like. However, all it takes is for a news story to come out. Oh, on gold, let's have a look here. All it takes is for a news story to come out, and then everything's negated. The fundamental data gets pushed to the back burner, because what this will then eventually do over time, and this is why traders react to it, is change the fundamental data. But the fundamental data ultimately is going to lag any deals that are going to be done. Now, this is just a headline. I think they're still talking right now, so it might be over ambitious to say that that this is definitely the case here, but it certainly looks to be a bit of a problem for the UK and for Boris Johnson with that relationship. Let's go back to gold. Yeah, the inverted head and shoulders is here. The inverted head and shoulder is here, and I picked it up on the right shoulder, and I only did this because I was looking at gold, and I've said for a long time that I think gold is more of an investment than a trade in many respects, because it is it's a tricky one. But I started looking, and I thought, you know what, if I buy a tiny amount of it here, if it starts to move in my favor, then what I will then do is start to add. So my idea really with gold is to add positions. So if you're looking to trade gold, I wouldn't suggest that you just buy in this area. I don't like buying an inverted head and shoulders when there's no trend line break, and we haven't had a trend line break. So this was just because I wanted to invest in it, and I saw what was going on with the news, and it's the news and data started to concern me, so I thought, okay, well, let's have a look at gold and see if there's a viable trade there, and a viable investment. And I thought, yes, there is, but rather than kind of like go through and pay huge spreads on buying a bar of gold, or what would be my preference would be maybe go and buy some digital gold, some Pax gold. I thought I would trade it, but trade it at no leverage, and effectively just buy an ounce of it. So all I've done here is I've bought an ounce of gold, or maybe a couple of ounces. I'm not sure what the thing is actually. I might have bought a couple of ounces. So I bought a couple of ounces of gold, and then if things go up, then I'll try and increase my position to get to a decent amount or a level of gold with gold. And with a profit, if there's profit from this particular position, if the trade works out well, then what I will do is I will move all the profit into physical. and actually utilize my trading account as a kind of a way to actually purchase the stuff properly. So I'm not going to use this as a trade, and I'm not going to close this position. I'm going to let it come down a bit further if it needs to, and then I'll buy another couple of ounces. So I just thought I'd take a tentative position here because we've got some level of support. And all this stuff with the debt ceiling, and there's enough out there to suggest that that gold could do well and the dollar could start to fail. Evergrande's and there was lots of things that kind of led me to the decision to say I need gold in the portfolio. This is a support line. This is a support line. We're in a buy zone. Why don't I try and start building a position from here? So that's all I've done. Now, as long as the chart doesn't come down to my price point before the Fed announcement, I will leave the position with no stop because I'm not worried about the stop because I've only bought, as I say, a couple of ounces, and if it comes down, I'm going to buy another couple. But if the price is up here, and then the Fed announcement's about to happen, then I'll put a stop loss in place because gold could tank, you know, and I might not want to be in the position to take that on board. So I'm going to play this pragmatically, if you like. What I really want to see is this position here becoming another inverted head and shoulders. So I kind of want probably. When I was really looking at this one here, but it does start to get a little bit too shallow because I'm really after a trend line break. I really want to see gold move up through this area, come back, but hold the trend line. I want it to hold the trend line, and then I kind of want an inverted head and shoulders there. Now I'm not sure how likely that is. I've probably done that slightly, that could probably be drawn slightly better. It's probably like this. I've probably got this level here. I'm probably looking for it to break through, hit the highs up here, hit these highs, then come back for a shallow retracement into the trend line. And with that, I probably want it to almost look like an inverted head and shoulders that was slightly higher. So the right shoulder being slightly higher, then add to the position there. Because if I'm willing to buy 2 ounces every time, if I buy 2 ounces here, then I can move my stops to break even here. So either way, I'm going to just hold on to it because I think that whatever happens with gold, we're probably coming back to this level at some point. You know, it's a fairly good level, isn't it? It looks okay. It could start to collapse down here. You see it differently. Well, Lewis, now Ainsley isn't in yet, and if you've got a camera and a mic, it'd be great for you to come on and have a chat because it's only going to be me today. Oh, nice, mate. I can see you there. If you haven't got a mic, it's no problem because I've got your picture. But sorry, if you haven't got a camera, it's not a big deal because I can see. Oh, yeah, you got a camera. Amazing. Okay, how about the mic? Do I need to give you ask that I'm
Good morning, sir.
There you go.
How are you?
I'm all right, mate. How are you?
Good. Not too bad. The thing is that I asked you about pounds because I see a very negative sentiment in pounds. I took a trade this morning, Singapore time this morning. So, you know, and that's actually compromised my Ftse because I have a Ftse short also.
Okay. Yeah.
Yeah. Okay. Talk about gold. All right. I'm looking at the daily chart. I see a short-term what they call resistance at this current level. I'm not so sure how strong is this resistance, and it's also I did a short-term FIBO from the 9 August low to the 3rd September high.
Yeah, that low there to this
September high. Yeah. All right. Yep. It's around the 50% region. And I have this observation that gold like to react on the 50%, 50 or 61, percent of this FIBO. So now it's just slightly over the 50% FIBO.
Yeah.
So on the short term wise, I feel that it a couple of days ago I took a trade, and then I told my other buddies that it may just come back to the 175, 1775 to 1780 region.
Yeah.
Which is exactly now. So actually, I really want to see it to come down. I mean, with the all the uncertainty right now, and this is why confusing, because if with the uncertainty in the stock market, under normal circumstances, we will see the stock market drop, right? And the gold should benefit from that, right? But
potentially, I mean, it all depends on why the stock market's weakening. But yeah, I mean, in this scenario, I think it's weakening because of quite a bit of fear, and possibly, there's lots, isn't there? But yeah, I'd go with that as well.
Mm-hmm. So that's why I'm quite confusing now. Whether do I still want to hold on to my long positions, or
in gold?
Is in gold? With at this level, maybe it's time to take some profits, and then wait for the it to retrace down.
I would say with this, because there's a trend line here as well, isn't there? So on the short term,
that's right.
On the near term, it definitely looks like a decent area. Somewhere in this zone, is it? Because we're now in the sell zone, aren't we? So I think there's in the near term, yes, there is definitely some profit taking to be made. It's somewhere sort of like in this area is where we're likely to kind of start to come back to. The big question really is, after the retracement, does it go through? Does it kind of like somewhere come back to this level of support here, and then start to move through? If you are trading it, I think it's a very sensible idea to take some profit and then see if see if it comes back, and then maybe even add to the position again here. Because with the fib is obviously sort of an uptrending fib. This would be 100% retracement. There's the zero. So it's coming. It's bounced off the 50. It's currently through this 38 as well. Which is pretty good. Now, if we take the fib from the high and flip it around, let's change these colors so we can see it. Let's make this one. Let's make it white. Now with this one, the 50% retracement is back in that sell zone. So it actually I wonder whether there might be just a little bit more before profit taking needs to be taken. Maybe 1785 on the futures looks like a better level to take profit. There's a little bit of weakness here. And it does depend on your strategy, of course, but I think considering what you're doing here, you're taking out at first. You're going to be coming out profit at first contact, which is great. That's the way that I would be trading it for sure if I was sort of trading on a short-term basis. But if you're after something a little bit longer, the most obvious position to me looks like that trend line, because the other thing with this is there's some closing levels here. There's some closing levels here. Gets a bit scruffy over there, but I think the 1785, 1788 looks like a better level, because there's confluence. There's more confluence there. Now, if we bring this fib back in, then you can see that it's slightly through that fib. I'm not sure, but this fib is right on top of all this zone here. Yeah, you see that in there. I wonder whether that's the zone. Let's say 1785, 1788. So somewhere in that area looks like the most obvious place for traders to have a think about it. And at that point, it could retrace back down to here, and then hopefully it goes through. Or it's difficult to know until we hear from the Fed. I don't think we can really know what's going to happen. But yeah, it looks a bit early, mate. I think that some people have got a bit spooked and they've started taking their profits on gold. What's your entry price, if you don't mind me asking?
My entry price at in a moment, let me take a look. 176.61. 170.61.
Oh, cool. Okay, so you're all the way down here.
Yeah.
I mean, that looks pretty safe to me. That looks pretty safe.
I'm just yeah.
You're down here. I mean, so let's have a look at this and see if it's. The thing is, you know, you're in a similar position to me, where I'm. What I want to do is just hold on to it. I don't want to sell it. I don't want to take profit. I don't want to do anything with it. What I really want with this particular position, and this is only my own personal thinking, what I want to do with this particular position is leave it in the background and then trade everything else the way that I trade it. Now, the reason I want to do that is that gold has been so unloved, and we know its function. We know sort of like that that you've got very few things that you know truly have acted as money in history, but we know that gold is one of them, and we know that there's all these problems out there. This is my thinking. You know, I know we got all these problems out there. If there's a collapse of the system, then I kind of want to be protected. Now, if there isn't a collapse of the system, I'll get stopped out. Big deal, no problem. I'll come back and you know I'll start trading it again. But my thinking right now is that I wouldn't mind a protective position in the market somewhere. And I've decided on gold. Bitcoin I will probably try and do as well when that becomes a little bit less loved as well. But I want a little bit of protection, sort of like, you know, in my on my side. So that's why I'm thinking, well, gold's a great one. Now you're in a similar position to me because you've got a position on, and you're in a place where you may be safe enough to put a stop loss in at break even. But because if we look at the charts, there's probably enough for it to have to get through. I mean, this could hold as a support. This could hold as support. You know, that looks like a pretty good level of support. You may well have enough room to. I'm not sure. It might be. It may just come and tip you out and turn around. It may tip me out and turn around. I don't know, but we may well just have enough room to put stops at break even, and then if it's going to go, it's not going to touch our stop, and if it's going to collapse, it's going to take us out. No big deal. We can get out of the situation, which is better. So I think the price point that you get in at does sometimes determine what your next step should be. Now, if you want some money out of it, and if you've got a decent position, if you've got quite a large position in gold, then to take profit wise, you know, because then what you can do is take some profit and then see if it goes through, and then add the position back in again. So it will also depends on how large your position is. You know, we're not trying to be kind of greedy. We're just trying to be defensive, really. So the defensive play, if you've got a large position, would be, you know, scale out a little bit, then scale back in if it pops up. And then, you know, we'll try and sort of like get ourselves exposed to gold as traders from here on in, because it's still likely to step, you know, to a degree. It might have an explosive move, but then at some point it's going to start to step, and that's when we can start to add to the position. So it really does depend on you know, the size of your account. But I would say that because the first rule is make your trade safe, I think you've got a decent price to say it should be pretty safe. The FOMC may just jerk it around too much. It's difficult to know that part. But if it doesn't, I would say that our trades are, you know, are both at the right price, that you know, a price enough to be safe, and we put stops at break even, and then just ignore it. If it stops us out, big deal, no problem. We'll just come back and trade something else. If it doesn't, we could be holding onto a position for quite some months.
Oh yeah, right.
That's what I'm thinking of.
Correct. That's why I you know, once remember I talked about 1750, right, level. Yeah. And when I saw that, you know, last couple of days, let's say Monday when it hit that 1745 level, you know, I start watching it and decide that, hey, why not we just take a long, you know.
Yeah, me too,
and
mate.
get long.
I was the same. I was the same, and I, you know, and this is the thing is, you know, I'm not trying to push you for knowing how much you put on it, because it's not relevant. But this is why I went in light, because I thought, you know what, this is the start of a building position kind of price point.
Yeah,
so I'll go in light here.
I have a very small position in. I only have a very small position in. You know, that's why I was hesitating whether to take a partial profit out first, you know, because if I take a partial profit, then the other balance is like very negligible, you know, so there's no point trading it anymore.
Yeah. Well, yeah, I think that's okay. I mean, I think if you've only got a small position anyway, you know, it's not really for me to give you advice about what to do with your money or your account. But if it was me and I had a small position, which I do, I've only got a small position myself. I've only got a couple of ounces, so if because of that, I'm going to ignore it. I'm going to put stops at break even. It's gone far enough. I'm going to put stops at break even, and I'm going to hold my nose and hope that it turns out well. You know, I'm just going to leave things as they are.
Yeah, just going to leave it. Yeah, good idea. Just going to leave it, and then let's see how it goes. You know.
Yeah, because
tonight
the thing is, mate,
so they may shake things up a little bit.
Do you know why? The other thing about this is that how often do you catch the low, the absolute low in a move? It's pretty rare, right? I mean, it is for me.
It's pretty rare, yeah. That's right.
Pretty rare, you know. The absolute low. Okay, we haven't got the absolute low, but we're so close to the absolute low down here.
Yeah.
That actually is well worth taking a punt and saying this is pretty safe. You know, this zone is pretty safe because it is near the lower end. I mean, it's already gone much further than, what's that, 19. It's break even now from stop loss. Right. You know, it's 50-50.
Yeah.
A little bit further up, and we're starting to get into you know, a completely different realm, and it could get pretty cool here. So yeah, I mean that's my thinking, mate. I'm going to try and grab this. Now, one of the reasons I'm quite happy to put the stop as well is that it's possible that if this is the low, if I get stopped out, it's coming just a little bit lower, and I might get back in down here. I might get a slightly better price. But one thing I won't be doing is taking profit. I'm leaving this one, and I'm going to speculate, and I'm going to see if I can actually make some safety, get some safety sort of like in the account.
Yeah, I mean, I just, you know, sometimes you get very frustrated when you are in profit, you know, and then after that, due to some news event and your profit being wiped up, you know, sometimes it gets very frustrated. So, well, I hope tonight FOMC don't give me some heart attack.
Yeah, well, this is it, isn't it? I mean, this is, you know, not really knowing what's going on with that. But this is where we got to keep our eyes on the charts later on down the line, you know. So we're not there yet. Yeah. But at some point later, then yeah, we're gonna have to kind of like we're gonna have to bring our eyes to what's going on with the FOMC and all that stuff.
Yeah,
I think the market may well be a little bit sort of, you know, tentative before that point, which is why we've taken the Ftse trade, and we'll see what happens later on. Thanks, though, buddy.
In fact, related to gold.
Yeah.
In fact, related to gold, I would recommend you take a look at silver. I think it's a bit more interesting in silver than gold.
It is. I mean, the different functionalities is the issue, but I agree with you. Let's have a look at silver. Right. Yeah, the silver does look good. I completely agree. I wonder whether, you see, the reason I've taken gold is as a kind of protective measure. Silver doesn't offer me the same protection, but what it does offer me is something a lot more volatile. And silver's a great one to trade. I mean, I'm not sure whether I'd be sort of looking at such a longer term investment play with silver, even though it's got the potential to double in price, you know. But silver's kind of like, because it's got a slightly different function. There are different fundamental factors with silver. Now, I don't know whether, because silver has a use case, and we are in this kind of area where there is problems with what's going on globally with supply chains and stuff. I wonder whether silver is getting a bit of a hit from that. If I'm honest, I haven't read up on it. I've literally just looked at it and thought, okay, I guess the binary kind of a decision for me is I'm looking for protection, buy gold. And silver as a play, yes, it becomes interesting. And there's obviously the kind of gold to silver ratio where you get the value of silver not being, within a band of gold. Have you heard of the gold silver ratio?
Yeah.
Yeah. So the gold silver ratio almost suggests that we should be buying silver over gold. But as I say, it won't do the same thing for my. What's that? Sorry.
In fact, I think in fact silver's giving slightly better rate of return for the same dollar. If you put it in gold and silver,
Yes, it is. I think if it goes up, silver is always going to give a better return than gold. There's no doubt because it's it's a lot more volatile. It's a lot cheaper, which means that it doesn't have to go as far to kind of get the percentage gains. But as I say, that it's the function that silver won't offer me. And that's why I haven't traded silver as well. But I might do. If the gold position starts to increase, maybe silver becomes a thing as well. I'm not sure. I'll have to see.
Have a look because I find that it's very interesting. Jeff always like to talk about the box, the rectangle.
Yeah.
And silver is exactly in that position, and it's at the bottom of the range. So if gold move, I think silver.
No question. No question. When you say
will move much more.
When you say the bottom of the range, do you mean on the monthly chart or on a different time frame?
It can be on the weekly. It's more obvious on the weekly.
Yeah. Yeah, we are. You're absolutely right. You're absolutely right. I mean, if we're looking at this, then what we have is, I guess, the top of the box.
Yep. There's a little bit there, yeah.
And then the bottom of the box, yeah. Yeah, it's definitely in a buy zone, isn't it?
Yeah.
Yeah, you're absolutely right. I mean, if you were kind of coming into this market and sort of like looking for opportunities, then I'd agree with you completely. I think looking for opportunities in silver looks like a decent form of travel. That could be a little, maybe a little. Well, it looks like an inverted head and shoulders, the start of an inverted head and shoulders, or some sort of pattern there. Definitely breaking through this area here. It should be off to the races, and it's all going to depend on why. FOMC nervousness is undoubtedly going to cause some shockwaves, into the market. Yeah. So it really does come down to why. If we do start to see these shockwaves start to filter through, then it's going to be fascinating. It's going to be really, really interesting about what happens with the likes of gold and silver.
Correct. That's why when I look at gold, when I switch over to silver, I say, wow, it's going to have a very good potential if silver moves. If gold moves, silver going to follow.
Yeah.
And the magnitude of that move is going to be so much better than gold.
Yes, it is because. You're right, mate. Because this is at $22 an ounce. So for this to
how low can you go?
Well, it's not only that, but from $22 an ounce to the highs up here, which is when you look at it on the chart, it's only this area here. That is 10%. So if you put 1% on here, and it goes to the highs, you've made 10% of your account. You're back. You're up 10%. Right. Now for gold, now that's the highs from the third to taking the trade here to the highs of the third. If we go back to gold, if you go to the highs of the third, which is these highs up here, now that move would be 50. More like 3%.
Yeah.
So you got a 3% move there over a 10% move in silver. Now this is why.
Yeah.
Sorry.
Yeah,
so this
that's why you see,
is,
the difference is very huge.
yes, it is, and this is why people will hedge out a trade with gold and silver. So they'll buy silver, for example, and sell gold. Now, if we bring this in, so gold is currently at 17. Let's call it 1780. Whereas silver is at 2280. So you've got 1780, so 1,780 over $22.80. Sorry, $22.80. So if you bring this in, 1,800 divided by 22.8, what you get is the ratio near the higher end of the balance. So the amount of times that 1 ounce of silver, 1 ounce of silver buys into gold is near 79 times. And when it hits 85, it's extreme. And that's when you really see that the pendulum swing in the opposite direction. If it hits 45, it goes the other way. So in fact, there might be 35 actually. It goes the other way. So we are in the upper region of this gold-silver ratio. Crossing the 80 boundary starts to become really extreme, and we're at 78.9. So we're practically at 79. So what traders will start to do is say, well, I'll buy silver and sell gold because of the ratio. The current ratio is in my favor to buy silver and sell gold. So I agree. I completely agree. I haven't got it into my portfolio as yet, and maybe I will put it in. But I do completely agree. I think you're right on the money with that. Right on the money. So thank you anyway, mate. It's very good of you. Oh, you've got a background.
Yep, I just got it.
I thought somebody else was popping in. I thought somebody else was popping in then. Nicely done, mate. Nicely done. Okay, mate. Well, is anybody else got anything else they want to sort of have a look at? Thanks, though, mate. It's good because I'm not sure if Ainsley's coming in or not. Really. So, what's that, buddy?
Yeah. It's a good discussion.
Yeah, I mean, if you got anything, in fact, any opinion on Bitcoin?
Bitcoin, something that I can't discuss with you because I don't really look at Bitcoin, but I look at. But when I took a glance of it yesterday, seems like it's at a very nice sell zone. If it retrace upward a little bit, it looks like a very good sell zone.
Yeah, well, do you know what the thing I'm finding with Bitcoin is that you're right. We got this kind of like head and shoulders pattern going on here. But I was talking to my buddy about this the other day, and he's really keen on Bitcoin, and he keeps saying to me, "You got to buy it." And I think he's right. But my issue is, and I said to him, the problem is that when there's panic, there will be a fire sale of every speculative asset. And okay, we're having a bit of a bounce back today, and the bounce back looks like an anticipation that the Fed are going to help the market out. Because what's for everybody in the room that is kind of not understanding why this bounce back is coming, we've got this potential default of payment in China with this Evergrande story, and there is a fear of contagion throughout the market. Now, if that contagion was to happen, then it could bring global stocks down right across the board. Could bring it down. It probably won't, because I don't think Evergrande's quite as big as the Lehman Brothers situation. However, if that contagion was to happen, then that would happen. Now, what people are then looking at is because there's a Fed announcement, they're looking now for the Fed to change tact. This is the day that we should be getting taper talk. Today is a taper talk announcement. Now, if taper talk was to happen, speculative assets are going to start to come lower because there's going to be a tightening of monetary policy. Free money is just going to not be out there. So that lack of liquidity could start to force the growth stocks, particularly the growth stocks, out, people out of growth stocks and possibly rotating in to cyclicals. And if you think about what's happening to cyclicals, gas going higher in prices. Now that's going to, relate to cyclical stocks. So you start to buy energy because what's happening with the inflation scenario. So that's the concern, is that there's going to be this out and out panic, and we start to see global equities move in the opposite direction. So If that was to happen, then there will be a fire sale of everything that you can get your hands on to either keep your position in the global stock market or try and get some cash. So so if you've got positions that could be liquidated, you're going to need to create some liquidity, and you're going to sell your things like Bitcoin. You might even sell gold. Lots of things could start to happen over the course of the next few weeks. So this Fed announcement is it's a massive deal. It's a really big deal, and it could shape the rest of the year. If they decide to taper, watch global equities start to fall. If they say that they're going to get accommodative, and China have handed them a bit of a get out of jail free card, because China have now sort of like basically saying there's a new shockwave. Well, I mean, in a way they have, haven't they? Because China have come back and they've sort of like they've gone, we've got this problem which contagion. I might come in and say, look, there are new factors, which means that we the taper talk that we've been having has to come off the table. It all depends on. Is that my internet connection? Am I breaking up a bit, or is it okay?
It was just a short little one, but it's okay now.
I'm going to connect to a different internet. Hold on. That should be better. It's trying to connect to another. There we go. That should be better. Yeah. So we got a situation where China have, as I say, they've handed the United States this get out of jail free card. So we'll see whether Jerome Powell uses it or not. But I think that's why we're having this rally. I think the rally's off the back of people saying Jerome Powell might help us out here. He may leave things where they are, but if he doesn't, there's going to be an almighty tanking. I would suspect. It depends, and it might be that he leaves things where they are, but he just it's the devil's in the detail again. There's almost no point in us trying to listen to the detail, listen to the speech, and make a decision. All we can do from here on in, I think, is get positions in the market that we think are buy and sell zones, because they're less likely to go through them today, which is what we've done with the Ftse. And goals. We got gold in the buy zone, great. We got Ftse in a sell zone, great. We'll try and make them safe before the speech, and then we will just let the fireworks happen. We might make nothing, or we might make a whole bunch. Because trying to dissect what the fundamental news and data is going to be, I think, quite tough. So that would be my take on the market today, anyway.
Yeah, Ftse is in a very interesting zone now.
The what? Sorry?
Ftse is in an interesting zone now.
Yeah, let's go back to the Ftse and have a look. So where are we at? Okay, so we have started to come off. Now let's see what this. So we've managed to get the short in again here, haven't we? Yeah, it's almost there, isn't it? I mean, I think with the Ftse, we need to genuinely come down by the top of the hour to flush some of the things out. This gap down here is a concern. This gap on the futures, that's a concern, for upside. Obviously we're downside, so we're quite happy with this gap. But that gap may well suck prices in here. And one thing I would say about the Ftse is, even if it gets a reprieve, there's enough out there which is just suggesting we could get a bit more of a slowdown, that says, okay, you can kick it down the road a little bit, but I think the Ftse is ultimately going to be below this price point at some time in the next month or so. So I don't mind holding positions here and seeing what's happened, but it's okay. You see, this pattern here is a really interesting one on the 15. This one here, this one here. So this 3-bar pattern here.
Yeah,
it's a really interesting one, because what you're looking for now, not this current bar, but what we're looking for here is an evening star, where the first candle goes up, the next one comes down. So this is the one that goes up. Sorry, the next one's a hold. So we see this bar here hold. and then this one should come down. Now, the significant one about the one coming down is that it should cross the 50% line of the body of the first one. And I think it's probably just about done that, but it hasn't really, it's not that convincing. So not the strongest signal. Now we can see if it has crossed 50% by looking at a fib. Take from the low to the body. It has crossed it actually. It's down to 61%. Yeah. It's not too bad. It's not too bad. It's a signal. It's not strong, but it is a bit of a signal that which suggests that we are likely to get lower. And you know, given that the structure of this 15-minute trend here, this is quite flimsy, isn't it? I mean, the way it's kind of taken off here, it looks relatively flimsy for further upside. So we should get a little bit of a move here, mate. Possibly into 69, 62, mate. Well, sorry, that's the futures. I'm pretty sure there's pivots on this as well. So I think there's a 69. Chance we could come. What's that, mate?
69, 65 level.
Yeah,
no,
on the futures. Is that what you are? Yeah. You're on futures market.
Yeah, I'm looking at future now.
Yeah,
I think future now.
Yeah, it's the future. I much prefer them. I much prefer. They cost more money, but I prefer them. It's for later down the line, you know. If you have to hold positions for a little while, I quite like them. Yeah. So we'll see what gives, mate. We'll see what gives. But I like the Ftse. That's going to be a target there. It may be here. So between 69 and 75 probably is going to be, because we haven't tested this area and it might bounce at that particular point. Let's draw some other levels in. I think longer term, you know, this is just the near term. Near term, I think we could aim here before profit taking, no problem at all. Down, you know, there's trend lines here. I'd say this gap is an issue. There's that low there as well. Yeah, I like that. I like that area.
I like the 6900.
6900s down here. 6900s. Yeah, I can see some support there too. Yeah, I could see that as well. The next few minutes are going to be quite, you know, potentially quite significant though, because if this does, you know, if it comes down to this level by the top of the hour, that's not only going to be a potential profit taking area, but it's also going to be a pretty negative looking bar coming into FOMC, and you know, we might well start to see this Ftse just drift down a little bit more. So what we're trying to ascertain is what's sentiment going to be going into FOMC, and it looks like it may just have shifted a little bit. It's not significant enough to say we're coming down, but it might have shifted just a little bit. So hopefully you guys are in the trade as well to the downside. You could like gamble with making it you know, relatively safe as well, which would be the idea. Get gold safe, get the Ftse safe, and hope it doesn't stop you out, you know, around the FOMC. But maybe make it safe later on, just in case there's a few more price fluctuations. But you know, around the 7 o'clock marker UK time, PM that is, of course. Then try and make them safe and see what runs. That'd be the idea.
That is 2 a.m. Singapore time.
What's that, mate?
That's 2 a.m. Singapore time, and I should be deeply in sleep.
Okay, maybe don't just before bed then. Just before bed might be the answer. But thanks, mate. Anyway, thanks for coming on with me. I really appreciate it. And you've been the buddy today.
Thanks for having me.
So we'll be back in with Jeff tomorrow, and we'll have John in the room as well. Thanks for you guys for popping in as well. I will find out.
I'm not able to join tomorrow.
Check out tomorrow.
So I may miss tomorrow's session.
You're gonna miss tomorrow?
Yeah, I'm gonna miss tomorrow. I got some things to do tomorrow. Yeah.
Okay. All right, mate. I will think of you as I watch the Ftse and gold. Hopefully, we're both being a lot of money with gold. That'd be great.
No problem. I try to listen in, but on the road.
No worries, mate. Okay. Well, thanks so much for today. Really appreciate that.
Yep.
Appreciate your time.
Nice to be the show. It's nice to talk about the technical things. You know, it's nice. Getting addicted to it already.
Yeah, well, that's I mean that's the thing about trading. But I think that's what this show is really should be about. Is it's all just kind of sharing ideas and and seeing, you know, because nobody's going to be right 100% at the time, and we do need to sort of share ideas to sort of make sure we help each other out. So I appreciate your opinion, mate, to be honest.
Great.
Thank you to Angel
Wonderful.
as well for looking after us. I'm presuming it was Angel today. I can't tell, to be quite honest. I will double check. No, I still can't tell. But yeah, whoever's looking after us today, I think it was Angel. Thank you very much. Thank you to Lewis. Thank you to the guys in the room as well. We'll be back tomorrow, as always, with John and Jeff for the quiz. Have a great rest of the day, guys, and be careful of the FOMC. Some of you may well be asleep, but if you're going to be asleep and you're not in a trade already, might be worth sitting it out just until tomorrow. But take care. Bye-bye for now.
Take care. Bye-bye. See you tomorrow.